So, Sweetgreen is an American casual restaurant that serves salad. The business model is simple, seasonal, healthy salad and grain bowls made in house from scratch using whole produce delivered every morning. And as you can see from the pretty much all time frames, this pump in the price of the stock. More recently, there was earnings on February 29th, and you can see the price pumped higher. And with that pump came positive news afterwards. And we're going to get into the news, and then we'll look at the chart, see how high price can go. So on this past Thursday, TD Cowen maintained a market perform rating on Sweetgreen, but increased the price target to $17 from the previous $15. This adjustment follows the company's fourth quarter earnings release, which revealed several positive developments, although the analysts expressed concerns about the stock's rapid ascent. Okay, so this is going to be key, right? Sweetgreen's recently announced earnings showed promising trends, particularly in terms of the restaurant's level margin guidance, which was set between 18 and 19.5%. This projection is notably 50 basis points higher than the pre-release consensus at the midpoint. Now, the updated guidance supports management's ambitions for a 20% restaurant margin in the middle term, pending a full recovery in sales volume. Again, key as well. Now, the market perform rating reflects a balance between the immediate positive risk factors and the variables that could affect the company's performance in the long term. Sweetgreen's stock price surged by 46% following earnings report, a move that analysts views as possibly overextended. Again, keyword overextended given the current assessment. All right, so we're going to go right to the monthly chart. And I do want to bring to your attention this level here. And that is a monthly buyer's level, we'll say at $7. But as you can see, price rose and came back, put its toes in the water in that upper portion of the zone, and that would have been good for at least a triple. All right, so let's scroll down to the weekly just to kind of see. All right, I'm looking for volume here. You had a flip zone as well on the weekly chart, right? Support, resistance, but price couldn't get back to that level, $8 level. Could also say when price broke this downtrend line, that was a beautiful trade setup. So Sweetgreen gave us multiple times to get long. Now that article mentioned overextended and concerns of price ascending too high. Again, we went from, say 2 weeks ago, we went from 11 to roughly $19. And if you look at the daily chart, you do have a nice golden crossover taking place, but look at all your moving averages. Price is at 1876, and your momentum 13 simple monthly moving average is at 1468. So a little bit more than $4 from current price, which again signals that a pullback is inevitable. Now I don't know if it's going to pull back to the gap fill at 13, but a pullback is inevitable. You can see 3 rejection wicks. So this week can price pull back even more? Yes. If folks who were in sub 12 wants to take profits, but nevertheless from a technical standpoint, if you scroll up to the monthly chart, you have support, which is now resistance. So it is time to start taking some off the table. However, definitely get out at the round hole psychological number of $20 if you've been in long, again, since around that $10 level. Thanks for watching. Subscribe, please. Like the video.